it should hit $1 billion this cycle. So what is that? How do we get there? I don't know. But there's a lot of things that people don't even know about, like Ticketmaster has issued 30 million NFTs. People don't realize that. So that was 30 million people who weren't crypto people, but because their Ticketmaster wallet, where they get their tickets for games and shows, they just drop NFTs into them. So, I don't know how we're going to onboard the billion, but it feels like it's coming. It could even be, dare I say it, CBDCs. If somebody launches one, it could be from India, where they're working on their CBDC. So there's a lot of different avenues that will create the billion people. We have been in recession, and maybe that comes up in the numbers in this quarter and next quarter, because all my forward-looking indicators, which precede that, always showed that we were in recession. So I think the numbers will show recession, but the markets will be trading recovery. CME or the CFTC needs to have some component part, and that part needs to be approved and finalized. And it's actually just that. So it's not like, oh, Gary's trying to slow the whole thing down. There's actually one of the component parts of all of these ETFs that require the kind of validation. I think it's from the CME or the CFTC. I'm not sure which one. Probably the CME. That bit needs to come into place. So they're just buying time to get that done. So I still think it happens this year.
This year. Okay, awesome. And how are you expecting that to impact the markets? Is that going to be one of these catalysts that move us over from spring into summer?
It depends what price is doing. Because had we launched a spot ETF in November last year, nobody would have bought it because the market was going down or it was feeling terrible. But as the market is recovering and we're in spring, and normally the Q4 is a strong quarter, if you introduce spot Bitcoin and spot ETH ETFs into a rising market, you will start to suck in the investment advisors, the individuals who found it too complicated to hold their own wallets and do all of that kind of stuff. So it really depends what the market is doing. But I think on balance, it's positive. But really, it'll show up in 2024, 2025 when the cycle's fully underway. It just makes an easy way for people who are not used to the digital side of things to just use equities and get their exposure. So yeah, look, overall, longer term, it's very positive. It's just yet another on-ramp. Short term, depends what the price is doing. Price is strong, we'll get a bit of a panic in from the investment advisors and stuff like that.
A prominent InvestAnswers host just made a bold call on Bitcoin. His forecast centers on the potential approval of a spot Bitcoin ETF, and if his predictions are right, Bitcoin could see a jaw-dropping surge of 3,200%. Here's the scoop. If big Wall Street players like Fidelity, BlackRock, and others allocate even a small fraction of their $25.22 trillion in assets to Bitcoin ETFs following the 2024 halving event, it could send Bitcoin's price soaring by around 3,219%. That means Bitcoin at $27,965 today could potentially hit $920,000 by April 2028. A top BlackRock executive even hinted this could happen in just a few months. In the crypto market, big investors are still playing it risky. Bitcoin whales are moving their coins to derivative trading platforms, indicating a heightened appetite for risk. This metric has historically signaled Bitcoin's bullish phases, and we're seeing it again. What's fascinating, major financial giants managing a hopping $27 trillion are entering the crypto world. The race to list the first spot Bitcoin ETF in the US ignited this surge of interest. Players include BlackRock, Fidelity, JP Morgan, and more. This $27 trillion is just a fraction of what they manage, but it could significantly boost the crypto space. Crypto is no longer a niche, it's attracting the giants of finance. Let's continue our discussion with Raoul.
The economy's slowing down, and it's going to be relatively slow for this quarter and next quarter. But the markets priced this in last year, which people can't get their heads around. They're like, we want our recession and we want our crash. Doesn't really work that way because we had it last year. In crypto markets, we were down 80% last year. People have kind of forgotten that. So what the markets are doing is forward-looking. So they're looking forward at where the forward-looking indicators are showing that growth will return, but inflation will continue to fall. Unemployment will rise a bit. So that's a kind of more Goldilocks scenario with economic growth coming back without inflation. So that's what markets have been pricing. That's why crypto's been so strong this year, and stuff like the Nasdaq's been so strong this year. So I'm very optimistic generally, and I think we're in crypto spring, and we'll transition to crypto summer, maybe Q1 of next year.
And I've heard you mention crypto spring on a few of your podcasts. For people that are listening that are very familiar with crypto winter, unfortunately, crypto spring might be a new term for them. How would you define crypto spring?
The crypto spring obviously comes after winter, and it's after all the terrible news comes out. And if you think of spring in terms of weather, one day it can snow, then it can rain, then it could be sunny, then it could be warm, then it could be cold again. It's kind of a weird time. But over spring, generally the weather gets better. And that's what we see in crypto. So you get still bad news stories, but the market doesn't trade as badly around them. It tends to go up over time, but it's a bit frustrating because it trades sideways for long periods of time, and then suddenly it goes up in 2 days and then goes sideways and then corrects again, that kind of thing. And that's the environment we've been in. But if you actually step away, if I look at my screen now, Bitcoin's up 72%, ETH's up 45%, and Solana's up 140%. So actually, it's been a good year, just hasn't felt that way yet. If you think of crypto as an economy, it needs money coming into the economy, right? Because it can't just be us retail lot, because we've all got our money in the economy. It needs to get new money. So that's why it's part of this global liquidity cycle. So when people get liquidity, they start investing in riskier assets like crypto, and it starts flowing in. So that adds liquidity to the market overall, which means that new projects get more traction, and it filters through the whole ecosystem. So money, like in any economy, this digital economy needs capital coming in. So that's what the institutions bring, but the institutions are also building on top of this. Everybody from Fidelity to Franklin Templeton to, I think it's Apollo. Somebody else announced today that I think it's UBS are building a mutual fund on Ethereum, tokenizing it. So what they're going to bring is use cases. And the finance system is the largest use case of all because it's vast. So that's another thing. Also, the institutions tend to invest in VC, so they're funding the new wave of projects. So if we think about it, about 62 billion went into VC investments in 2020 and 2021 and 2022, or 2020, 2021. That money got put to work by thousands of entrepreneurs who are building new applications, new opportunities. And that's what the space needs as well, because we've got this great technology, but technology is not enough. It needs to get to user level. What applications can we use where we don't even see that we're using crypto? So that's why institutions are really important. Also, it's important because things like ETFs allow investment advisors to allocate people's money. So it's not just like Goldman Sachs putting money in. It's actually all of our money, our savings and investments and that kind of thing. So it allows people to participate in this in ways that they couldn't participate before, because it was harder for them via investment advisors or financial advisors to actually access tokens. But this, when it's an ETF, they turn it into an equity, essentially. Everything is in this very cyclical world. So it's something we have to get used to. But I think the cyclicality over time becomes less. So each drawdown in crypto, the overall market falls less. And you can use Bitcoin as the best example. Each time it just falls a little bit less. So maybe next time around it falls 60% and not 75%. And previous time was 87%. And the previous time to that was 97%. ETH fell in 2018, 97%. This time it fell 85%. Maybe next time it's 75%. So volatility does get dampened as more participants come into the space and the more activity. And eventually, once you get kind of financial market activity where, let's say, equities are tokenized and stuff like that, well, then there's ongoing demand for activity on chain as well. So it's not just based around liquidity, it's just about general activity using blockchain technology. So look, we're not out of the woods yet. My guess is we have to keep going through this miserable cycle of I'm rich, I'm poor every few years until maybe 2030.
Billionaire Elon Musk has called for a comprehensive overhaul of regulatory agencies, which includes the U.S. Securities and Exchange Commission, SEC. The Tesla and SpaceX CEO added that there needs to be a commission to take punitive action against individuals who abuse their regulatory power for personal and political gain. Robert Kennedy Jr. promises to end White House war on Bitcoin, says we need freedom currency that government can't control. Russian President Putin says U.S. dollar-based global financial system is collapsing. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.